All right, people, welcome back to Chart Request Live. This is my favorite show. My name is Patrick Dunawilla. I'm the editor of the Chart Report. I'm here joined by my esteemed colleague, Mr. Steve Straza, the director of research at All Star Charts. Steve, how was your holiday? How was your Thanksgiving?
Lovely Thanksgiving. Did a
You
little
you ready to get into it?
staycation. I heard that your holiday travels were a little bit more complicated than mine.
They always are, though. I mean, you've known me long enough to know that it's never a normal, just point A to point B. There's always something involved. So
Not. All right. Do you have the emailed requests?
I do, and just so you guys know how the show works, if you're new to it, you just drop your ticker requests in the chat, and we'll be sure to get to it. But first, we always give priority to those who email us their ticker requests. So we're gonna get to those first.
We're gonna do a little macro first.
Yeah, why don't you kick it off? Just a brief kind of overview of the markets. It's been a real quiet week so far.
Let's get tactical, Pat.
Let's get tactical.
So, Russell 2000 futures, right? This is the July peak this summer. And this is the corrective wave that brought us all the way back to the range lows, right? If you zoom out here, these range lows ended up being a textbook retest, and now we're moving higher. So talk about kind of what we can look for, how we could use this chart to determine maybe the next move for the broader market. I'm going to draw a little bull flag or pennant, I guess is what you would call this. Either way.
Right below the 200-day moving average too. I know a lot of people have been watching that on IWM.
Yep.
Yeah.
So it's a short-term continuation. But I mean, you could do something like this, right? It's kind
Yeah, I
of
mean, say what you
illustrate.
will about the 200-day moving average, but it's been a really good way to define the trend for Russell.
The important thing here is that this is November 14th, this monster candle right here. And this is actually when market internals peaked in the month of November, right? So fewer and fewer stocks have been making new short-term highs and even new 52-week highs for the past 2 weeks now. If you look at the strongest indexes, you might say, what? Right? Like here's software since November 14th, just steadily grinding higher. Here's technology since November 14th, steadily grinding higher up until today. Here's even look at the major averages. SPY.
What about RSP?
The point I'm trying to make is look at the Dow since November 14th, right? Doesn't look like a correction.
Right.
Trust me, I promise you, most stocks have been correcting and look like the Russell does here.
That's a really good point, Steve.
Right. So if this little coil in the Russell, call this the average stock or what most stocks look like, if these coils the last 2 weeks are to break higher here, what do you think an index like the Dow, which has been steadily grinding higher during this little stealth or beneath the surface corrective action over the last 2 weeks, is the Dow going to start falling when the rest of the market kind of picks up the pace and starts playing catch up? I don't think so. Sure, anything could happen, right? But the best ones probably continue to look better and better, or keep looking better and better, while the average ones maybe play a little catch up and you get some sort of a resolution from this little coil in the Russell 2000. Do you think that's a hot take?
No, I think that's a really good point. And I hadn't really put them side by side like that and really juxtapose the action over the past 2 weeks. Because, I started off by saying it's been a quiet 2 weeks, but you really got to drill down to look at what's actually happening. And
Right, because
but
it's
I'm
easy to
also
look
glad
at.
you started with the Russell 2000 because one of our first email requests is a fun little exercise. He says, and let me get who it's from, Alex. So shout out to Alex. He says, would you rather be long XBI, so biotech, or the Russell 2000 over the next 6 months?
Well, easiest way to answer a question like that, up against each other, right? So biotech, good day here today. This is the relative trend between, I'm using equal weight biotech. Did he drop a ticker for the bios?
No, XBI, yeah. So you're on the right one.
This is XBI IWM, steadily underperformed small caps. Biotech's underperformed small caps basically until the bottom last year.
And that's saying something because small caps have been real weak.
Yeah, it's hard to underperform small caps. But biotechs have been one of the absolute worst groups, right? So I think what this chart would probably show too, if I were to overlay it, is that this ratio probably tracks the market pretty well. In other words, in bull market periods, biotechs will probably outperform and lead the Russell 2000, which is a diversified small cap index. And during bear markets, because of that same beta, biotechs will probably underperform or lag the Russell 2000, just like we saw from here in 2020 to the lows of 2022, right? So I think if you're making a larger bull market call, biotech is probably the answer. However, still seeing very little evidence that biotechs are ready to outperform when we look at the relative trend. And let's just throw up the absolute chart quick. This is what the bios look like. I will say, I do like this, right?
Yeah, I know JC's been sharing that one pretty often lately.
Oh, no kidding. So listen, we continue to bottom and hold these prior cycle lows, bottom around the same place. Just happened here again in October. I think if you were looking for like a tactical opportunity here in the bios, you probably literally wanted to buy this support and you'd probably be taking profits right around here. If I were to fib this out, yeah, look, this is one way for short-term trades or tactical trades. I'll measure out the fib from the range high and range low, 38%, something like this, that's reversionary, right? Counter trend in nature. You don't want to get too greedy. I think you probably want to buy 64 or buy those pivot lows here from last year and probably sell the 38 here around 76.
I like it. I like it. So let's move on because we got a ton to get to through the mailbags because I want to get to all these great ones that people are dropping in the chat. Keep them coming. So let's move on to John from the mailbag. He requested 5 different tickers, but why don't you just go ahead and pick 2 of them? We got gold, GBTC, Roku, Twilio, and Microsoft. So GBTC, GLD, gold, Microsoft, Twilio, Roku. Roku.
I mean, do you feel strongly about any of the others? I don't really feel like talking about gold.
I feel like, gold has been covered at length, Bitcoin also, and we'll probably end up talking about them anyway. So
GBTC is just a vehicle, right? That really, if that's the vehicle that you want to use to express a bullish Bitcoin thesis, I have no problem with that. I think it's actually a pretty good option. But you really want to analyze the Bitcoin chart, even if you're expressing that thesis through GBTC. That's what I'll say about that, right?
Right.
So the question really, yeah.
Would you say the same for gold? Like if you're, instead of looking at GLD, would you rather you'd be looking at?
Yeah, but it's so close.
Right. Because it is a spot index.
Yeah, you don't get much slippage between GLD and spot gold. All right. So, but yeah, it's the same concept. This is, in my opinion, a completed base now. 200-day moving average. You see the downtrend, falling 200-day, sideways trend, the base, the rounding bottom reversal pattern that has literally taken a year and a half to complete. 200-day moving average now curling higher beneath price. Probably going to start looking like it did in 2022, but now going in the opposite direction, up and to the right. This simply means a completed reversal pattern, that a new uptrend phase is underway. The path of least resistance is now higher. You buy weakness in charts like this, right? Once you get the completed reversal. But this one's still fresh, which is why when you threw out that list of tickers, I went right to this. This is a fresh base breakout. The way you would, determine a price target for here, I think you just keep it pretty simple. 100 is the upper bounds of this base. Those are the August highs. The lower bounds, call it 38, maybe 40. Okay. Measure that out. That's $60. Tack that on top of the base breakout level. Call it 160.
I've been a fan of your measured moves lately. I like it.
Yeah, there's a time and a place for a good old measured move. Right. So 160, 60% higher from here. Keep it tight. Yeah, I don't really think you want to be long if we're back in the box. And and back in the box happens on a violation back below these July or August highs around 100.
Yeah, and Steve, this is one that we get asked about a lot. I feel like almost every week, maybe every other week, we get asked about Roku, but I can't remember the last time it looked this good. Would you agree? Maybe this summer when we saw like a lot of those ARK stocks make a comeback and then fail.
Yep. So Pat, this is one of those bases that we've just been pounding the table on. We continue to see base after base after base complete. And frankly, rather than buy a stock that completed a base back in Q1 or even last year, like a Microsoft or an Nvidia, which has already gone on to hit 2 price targets this year,
Right.
or maybe more, I think this is where the real opportunities are. Go down the cap scale, move a little further out on the risk spectrum, right? Get into this riskier stuff. This is whatever, non-profitable tech, speculative growth. These bases are fresh. They're just now completing. This was Nvidia 6-8 months ago, right? And I would rather be buying one of these fresh breakouts than betting on another leg higher with a stock that's battling at overhead supply at its old highs.
Yeah, and like I said, a lot of these bases looked like they were complete this summer, but then those failed. And I would argue that they're probably more solid now that they've kind of had that corrective period. Sentiment's been washed out. The initial dip buyers kind of got washed. So it's that basing process, that frustrating thing,
The longer the base, the better. Think of it as a launch pad, right? You're sending a rocket to outer space. This is your launch pad. You want as formidable and as strong as possible. You're building a house. This is the foundation, right? The bigger, the better. There's a saying, the bigger the base, the higher in space. That's what that means, right?
Yeah.
So absolutely right. Hey, another 6 months of base building. I love it. And there's other stocks out there that are still building those bases now. Like here, let's just contrast this, Pat. Like here's IWM, right? We're talking about here at this bull flag. Really, IWM gets exciting when we're talking about it probably Q1 or Q2 of next year, and it's back up here around 200, right? And we're at that point, everybody and their mother on Twitter is posting a chart that looks like this, right?
Yeah.
So, oh my God, look at this textbook reversal in IWM. Like that's what's coming. So many of these stocks, again, if IWM is the average stock, okay, some people are going to be like, no, it's not. It's the value line. Let's do that one then. Same thing, right? The value line, this is the best illustration or representation of the average stock. These bases are just like, there's so much more to do here, right? But if and when they finally complete, just like we're saying about Roku, that's the real time to start getting aggressive and start getting long. Right? So most stocks still need time. The best stocks, I think it's important for context here. The best stocks, right, in Nvidia, just like we talked about, these bases went a long time ago, right? This is when we wanted to get aggressive in Nvidia, 200.
Yeah.
Like 3x.
Why don't you pull up Microsoft? Because that was one of his other requests. So we'll knock that one.
Even better example.
Because it fits with the point you're making.
Microsoft, yeah, absolutely does. You could draw this in a bunch of different ways. And it's not.
So you're talking about that. So earlier this year, that's kind of the base phase. Microsoft was at the phase where some of these other trades like a Roku are at now.
Buying Roku right here today at 100, it would have been like buying Microsoft in April at about 290, taking out those August 2022 highs, right? Today it's almost 100 points higher, right?
Yeah. So
I like the fresh ones. Basically, it's telling you that fresh trend reversal, right? Or a primary transition and trend is underway now. And you're probably in second, third, maybe fourth inning of a new uptrend. Some of these other bases that have already completed, it's hard to say how long the cycle runs for, right? Do you hit 2 price targets after your reversal is in, or do you hit 8? We really don't know without hindsight, right? But you can stack the odds more and more in your favor by buying the freshest reversals, right? And that's when we talk about Roku. That's why I think this one's really interesting right now.
So let's move on.
It's a risk reward game. Sorry. It's a risk reward game too, right? Like here, we're talking about a price target at 160. So, $60 of upside, $3 of risk, 20x risk reward. Again, stacking the odds in your favor. I like it a lot. Sorry.
Absolutely. So let's move on to one that is complete. This is one of my favorite setups out there right now. I know this stock. Maybe I got a little bit of affinity bias to it, but Visa.
Uh, I'm going to embarrass you. So Patrick has a special place in his heart for Visa. And it's not because it's a secular leader, shown here,
Which it is.
which it is. And I know that you said that, but earlier on in our careers, God, 5 years ago, when we were both working in a WeWork office most days in New York City,
You know what?
a good old thing that I like to call the chart report. Have you heard of it? Which Patrick runs so beautifully these days. We were doing, basically, it was like our first media at a company called Real Vision. And Pat and I would go and we would like do these trade idea videos where basically they tell you to come bring one of your favorite ideas. And we would walk through like the whole top-down approach and do like a 10-minute interview. And then it would be up on like on the Real Vision site. And
I think we were their bench warmers too, because they'd always call us like 24 hours before, be like, "Hey, someone canceled. Can you guys fill in?"
And we were just starting off, like, so we were excited about it too, right? And in hindsight, this was some of the best practice. We like, how lucky were we to be in the city and have that opportunity to sit in front of a camera? Considering what we do now, this was a time when we were never in front of the camera, either of us. And now both of us almost every day are up here in front of the camera, and I'm constantly reminded of our experiences at Real Vision and what we did. Anyway, Patrick's first pitch, first one ever, right?
Yeah.
The first one you ever did, he got on and he pitched a long idea in Visa. Target's been hit. I'll just say that.
We had it at 150. If you go back to 2019, you can probably find that base that we were getting bulled up on.
This is it.
But I remember calling you and being like, "What should we do? What should we do?" And you were like, "Go with an easy secular leader. This video is going to live on the internet forever. Go with one that's just going to be don't go with the hottest, trendiest stock right now. Go with a secular leader. This is a great one." I was like, perfect.
It was good advice, right? It's true. Yeah. People are still watching this video. Here's where Patrick recommended it all of 5 years ago. That's the base you did.
And this was back when it was one of the largest components in XLK. It was still a tech stock back then.
You brought the whole relative trends. We do the whole top down. Listen, the pattern today looks similar, doesn't it?
Yeah.
Just leave this line chart up, because aren't line charts like easier? Don't people who use line charts instead of candles probably like sleep better at night? Worry less about like things that probably don't matter too much, like intraday price action. So look, there's never anything wrong. Don't ever let somebody make fun of you for using a line chart, right?
No, I like them.
Crazy. Line charts are great. I like them a lot.
Like you said, a little less noise. You can see the trend a little better.
Yeah, that's the other thing too. No candlesticks or bars if you're doing a ratio chart. If you're charting two assets against each other, I don't want to see your crazy candlesticks, right? In those intraday moves. Just a line chart. So Pat, this one's simple. All day, like Visa's one of those stocks, like, people ask me about Visa. Yeah, go for it. Good. Buy it. That's a good one, right? Always a place for Visa, especially in long-term portfolios. Companies hikes their dividend, pays a consistent dividend, grows consistently. There's all this bullshit talk about the blockchain and these, new payments companies disrupting Visa, MasterCard, American Express. The moat that these guys have, and they're not stupid either. They also have a ton of great data. The businesses that these guys have built over the years are just, they're not going anywhere. I love these for long-term buy and hold type stocks. Visa, the way you would want to do this right now is if we're above this 250 level, keep it clean here. Keep it clean. Above 250, target 300.
Yeah, 250 gets you 300. Real simple, secular leader. If you're a buy and hold type, this one's for you, I think.
Is Visa in the Dow? Visa's in the Dow, no?
I believe it is, yeah. I think so.
So this is Visa compared to its Dow peers going back forever. Right? You want to be in stocks that outperform the averages.
Wow, look at that thing.
Yeah, it's impressive. All right, what else?
So we got a lot more to get to in the mailbag, but we only have a couple more minutes here, and I haven't gotten to any in the chat, so I want to hit some of them
Rip through.
in the chat.
I'll go so
Alex
fast.
Galbus, I might have butchered your last name. I'm very sorry. SYM.
Stop telling stories about when you used to do videos in the city. You're wasting people's time, man. See their stocks. SYM Symbotic.
Symbotic.
Is
That
this
must be it.
genomics? Is this a genomics thing?
I'm not sure if it's genomics. Certainly looks like a biotech, right?
It's not. Automation technology. A bet.
Industrial machinery. Okay. 29 billion.
So this
Wow.
one got SPACed. Don't ask me how I know. Cheat code. This one got SPACed in about June of 2022, and it has defied the laws of SPACing.
In June of 2022, like the worst time to go SPACing. Huh.
It has defied the laws of SPACs. It's actually moving higher. I thought DraftKings was the only one, the only successful SPAC. Hey, look, but seriously, the stock continues to respect our fib levels here, right? The ranges. It's paying attention to these fibs. I think that's it, right? You don't want to overthink this one too much. It's off the lows from last year, just beautiful uptrend, roared higher. You can call this a base on a base. Draw real quick. I'm trying to go fast here, so excuse me.
Wow.
Base, and then another.
Like
base.
you said, that's not something you see from SPACs every day, huh?
No. Whatever these guys are doing, they're doing well. If I had to guess, this is some sort of like AI, industrial machinery, robotics type of play. And there is really exciting stuff going on in that space, right? We think of AI the way that we use it, Patrick, right? Like helping us every day and blah, blah, blah. Think of warehouses and factories, right? And assembly lines and how they're going to implement not just robotics, industrial robots, but AI in their processes, right?
Automation.
So this is a huge new secular growth space. If we're above 60, long all day, call it 90, that's a 50. That's a 50, you know?
And I like this one because it fits those two themes, like you said, kind of the AI and industrial, right? I've seen a ton of industrial names.
I like it when they check the boxes. I also like that I've never heard of this one. Because a lot of names that you've heard of are bullshit, like C3 AI.
So thank you for bringing that one to us, Alex. So this one, I want to get to WIT next, WIT.
People keep asking about this one. We just did this one on Tuesday.
Oh, okay.
Just did one. Yeah, go back and watch Tuesdays. I'm literally not going to say anything different. I guess the moral of the story, based on, we talked all about it Tuesday, is listen, this is an India stock. And we've been known to do some work on the Indian stock market. There's just so many better looking names in India, right? So you're buying a laggard, not just in I think this is a tech name or a software name, not just in the software space, but regionally too. Like you can go to India, look up their components, use INDY, INDA, any one of those funds, and you're going to find far better looking charts than this. With that said, we get some sort of a little base breakout here. Let's just zoom in real quick. Is it buyable on some sort of like completed base around here? Yeah, fine. But it just, there's better stuff out there.
Yeah. So Stock Market Mike said, just make this show an hour. You know what? I don't think that's the worst idea. I think you and I could absolutely go for an hour here. But Stock Market Mike also requested SSD. This one's new highs, and I know you like all-time highs.
SSD. Stock Market Mike is one of our legacy chat members, holds it down, the morning show, just about every day. You're up there with Rachel, dude. Really good stuff. I'll say 45 minutes. I got to be honest. I'm doing video more than I'm not doing video these days.
I know. Yeah, you're
like running out of time.
Right. You wake up and you're just on camera.
Running out of time and I love this. Don't get me wrong, but I want to answer your guys' emails and shit too.
So this one, the building products company.
You know what? Forget the fibs here.
7 billion in market cap.
Here's how we do this. Do this real quick. Okay. So
by the way, when I was doing my buzz report last week, I saw a ton of construction names and industrial type, material type names. I don't know if you're seeing that too on your work, but a lot of these like building and construction names, and kind of begs the question, like how bad can the economy be if all these building related infrastructure names are doing well.
What do you think Mike's time frame is? Because we could do this one this way.
Mike, drop your time frame in here if you're listening.
I guess the reason I ask is because this is one, I don't know what the cap is here.
7 billion.
It's a mid. Yeah, it's got one of those sweet spot yields. I love seeing a sub 1% yield. Usually just like such a good sign.
Why is that? Leave runway for growth?
Usually, like, nobody comes out and is like, let's instate or let's announce a dividend and make it 25 basis points or 50 basis points. Nobody does that.
Right.
You come out and you say, okay, let's start paying a dividend. Let's do the market average, 1.5%, right? If it's at 0.65 or, 0.5%, it's usually because the numerator moved, right? Price. Or, I'm sorry, the denominator when the dividend yield conversation, right? If price keeps moving higher, your dividend yield is going to look smaller and smaller. Nobody really comes out and says, I'm going to pay a 0.65. Some companies do, right? Of course, there's always exceptions. But for the most part, when you see a yield like that, it's because price has been moving. And Pat, just look at this, right? So this is SSD,
beautiful.
Broader market. This is the relative trend. Sideways for almost 20 years, getting pretty decisive breakout here. This is the weekly. So this thing's kind of
years.
Yeah, gunning it higher. I really like this. So let's outline some levels quick.
Mike says he likes it above 140. Mike, let us know how long you're thinking for this trade.
Yeah, because you could do this in a couple different ways. So
he says long term
highs here. I would, for something real tactical, I think you want to define your risk at these pivot highs around 164. However, there's no harm in wanting to hold this kind of a stock longer that just continues to outperform the broader market, continues to trend higher in absolute and relative terms. If that's kind of what you're looking to do here, yeah, let it breathe, let it dance. 140, probably generous, more than you need, but it is a big level of interest at those late 2021 highs. So you could definitely use 140 for a longer time frame trade. And then there's two ways to do the target. You could either use the next fib here, 685, get you to 230. I like that. Solid profit potential there. Or just measure the base out and we'll just do some napkin math. 76, 140. So that's 65. Throw 65 on the 140. What do you get? 225? I'm sorry, 205. So if you measure the base out, 205,
that relative base there just says it all. I think the 20-year base and like you said, for a long-term one.
JC's calling me. He always calls during the shows.
So I want to get to Wing of Text because he or she was one of the first in the chat. The request was HDSN. Hudson.
HD what?
Hudson Technologies, HDSN. So this one, it's under our normal market cap.
Let's go to the next one then, Pat.
Okay, yeah. This one is a little too small for us. Normally, we like to look at things over $1 billion in market cap.
I don't want to call from our lawyers.
Okay, so let's do Palantir, because Palantir was one that was
good,
getting talked about a ton 2 weeks ago. Every technician on Twitter I saw had that chart. I really liked the chart too, but it didn't really quite work out.
Stop. You got to be patient, right? With a stock like this, it's easy to say it's not working out. Over whose time frame? It's up 3x since December of last year, gone from 6 to 20. Right. So listen, does it deserve to digest and consolidate a little bit? Absolutely. Also, though, and more importantly, it's been doing that since July. Right. So you have this sweet automatic reaction. If we zoom in here, right, you have this nice reaction off the base breakout, which I have drawn this way. Again, you can draw these base breakouts in a number of different ways. I think the biggest takeaway is you need to see an upwards moving average that has flattened and curled higher to know that the reversal is really in.
Kind of like a transition to stage 2 uptrend, right?
Yeah, at least over a longer time frame, right? I think the 200-day is like, if there's one thing that the 200-day moving average is good for, it's to define the trend. So
Yeah.
you see it here. We have this just, absolute blast off. We go from 7 to 21 in 3-4 months, May to August, and then straight sideways. When this little consolidation, and it's not a little consolidation, it's actually a very wide ranged, kind of obnoxious consolidation, but always think of the stock market and vehicles in the stock market as risk reward equations, right? Palantir is going to give you 3x on a big, leg higher, but it's also going to correct 50% when it pulls back, right? So it's, if you can't take the downside, then maybe you just have to, okay, then I'm not going to be in the market for a 3x, or go buy Microsoft. You won't have that problem.
Go buy Visa, yeah.
No, but it really, right? It's different strokes for different folks. You start to find yourself and really get to know yourself when you're trading or investing and stuff like this. And a lot of that comes down to your risk reward and your risk preferences. So Palantir, the reversal's in, the consolidation is now very much in. 20, next stop 30, 50% move probably happens really quick too once you get it. I think this one is so actionable right here. I want to see like a big candle, right, on a resolution like this. If Palantir had like some big green candles trading into the 20s today, I would say buy it hand over fist. I guess the point is, put it on your watch list, keep it on your radar. When this little consolidation goes, you're going to get that next leg higher. I think 30 is a very reasonable price target. Probably looking at, I don't know, 1 to 3 months tops for a 50% move from a stock like this. Do you think that's like too aggressive of a time frame?
No, I think you made a really good point about how we've kind of already seen the consolidation, that corrective phase over, midway through the summer. That's a really good point. And
When
when
these
it
stocks
goes, it
go,
goes.
they go. When these
Right.
stocks go, just hold on.
So we got. I would like to get to wavies if you have time. This
You
one's a
better.
weird one. Agro, AGRO. I've seen a lot of people talking about this one lately.
I know it.
$7 trillion market cap. Am I seeing that correctly? That's impossible.
1.2 billion.
Okay, yeah, I'm
Oh,
seeing 7 trillion. I don't know what the heck
you
that's.
looking up that India one?
Yeah. Am I looking at the wrong stock?
Yep.
Yep.
Okay, so one thing I have learned about Wavy is that, similar to me, and this is why I like you, Wavy, he's always got big bases on his mind.
Wavy.
I know Wavy likes a good base just because I'm paying attention to the kinds of stocks he's asking about. And look, it's a good way to go about what we're doing here, is spotting the biggest bases and then looking for ways to craft long entries around those bases. What is important to keep in mind when you're trading chart patterns that look like this is that you have to be really patient. I'm zooming out more than 10 years here, almost 15 years. When these bases
One week can seem like an eternity on these things, but it's one bar on a weekly chart.
When these bases go, you want to be involved, but you also want to be really patient. This is for a longer term position trader. Frankly, somebody who's position trading massive structural chart patterns with like a 1 to multi-year time frame, right?
Right. This is almost one you don't even want to check every day.
Yeah.
You're just going to micromanage it.
So I think here, confirmation. I think confirmation looks pretty clear. Either the 2016 or last year's high, 2022 high. 13. I think you could start getting a little bit cute and jumping it. I think you probably jump it above this pivot high from August, right? You're trying to jump an entry. However, jumping an entry in a chart pattern like this, that's a very long-term chart pattern, isn't my favorite thing to do, right? I'm happy to jump an entry on something shorter term or a base or something like that. When I see a million other bases, like the ones that we're talking about, resolve higher, yeah, jump it. Something like this, boy, you get false starts, you get whipsaws, you start to go, you get hard retests, like it could be tough. So that's, I guess, the disclaimer. So 13 for confirmation, called 1180 for a get in now. And then I don't know. I'm not really sure what Wavy's time frame is, but really, why not measure this base out and get something out of this one if you're going to be so patient? 1975 first target. You can also, if you're feeling crazy, measure the base out, which is going to give you I don't know, measured move about $10 and put you at about 23,
I got
right?
a question for you on these measured moves since you've been doing them. Do you um do you think that measured moves should be calculated in an arithmetic scale instead of a log scale? You know what I mean?
I'm counting points, not percent.
Okay.
So it wouldn't matter.
Oh, okay, that makes sense. That's why you're just doing the math in your head rather than drawing it out.
You can do percent. However, with a 10-year base, you want to see what that would look like? No, it gets crazy. No, but I think
Yeah.
it's a good question. Let's do it, right? So if I were to measure this out by percent, okay, 260% is the size of this base. So what Pat is saying, then tack 260% onto the top. Hold on now. And it's not that it can't happen. In fact, I think this is a very sound and logical way to measure a move. I don't do it unless I have to. However, the point is, if I'm buying something above 13, I want to sell it before I'm dead. If you measure this out by percent, you're going all the way to $48, right? As opposed to my price target measured move, or I'm sorry, my absolute target measured move, which basically call it 3 to 13, 10, you tack 10 on the 13, 23, a lot more reasonable, right? But
Yeah,
you can do it either way. Percent is not wrong at all.
I like it. I like it. So what do you think? Do we keep going? I mean, we have a ton to get to.
How many? Why are we so bad at this? I fucking
You know
talk.
what I think? I think we just have fun with this show, and I think we just keep going. Usually, that's what ends up happening a lot.
We'll do one more.
And we have awesome viewers who always bring like these tickers that we're not always seeing, and they know how we what we like. They bring us some nice bases. So, yeah.
Yeah, this is the best show. It's one of my favorite things to do every week. This and
Uh, so what? Why don't we look at one more before we go? Let's look at coin, and then we'll hop. I promise.
oh, look, don't get greedy in coin. If you're just getting into this one recently, I'm sorry, but you're late. Been pounding the table on this since November of last year. I was a little bit early, but we got long at 39.40 in this one. Right around here, we've had.
I mean, Steve, you were on the Compound and Friends around this time last year when this thing was
Yeah.
beaten down, and you got laughed at. You got
I
laughed
did.
at
I
by
love Josh, but he did
some of
laugh.
our favorite people.
I mean, that was such a sign of the times. Talk about the sentiment data I got from that podcast, right?
And
I
I'm
mean,
pretty sure it doubled within the next like month or two, right?
yeah.
The
So
equity, not the options, and you were in the options, but
I like the juice. Listen, it's simple right now. Like we've been talking about, this is a great way to wrap it up too. We've been talking about a lot on here today. The base. The base is in. In fact, we were using just kind of this is how we've traded this one. We were actually using like 84 as the base breakout level. And this is what I'm talking about. You could jump stuff, right? So the way we were looking at this base was this was a blow off here. Ignore it, right? And that the true price memory was at
uh,
about 84. One touch, two touches, almost three, four touches, five touches, right? Keep pounding on this 84 level. Then we got really obnoxious and really aggressive. If you drop a VWAP from the prior year-to-date highs from this summer, right? Kind of had this tight little consolidation down here right below the base breakout level. Then we launched higher through 84, I don't know, just earlier this month. Been less than a month. And we ripped from 84 all the way up to like about 130. Now it's time to be patient, right? This thing's been down like, I don't know, a handful of days over the trailing 4 or 5 weeks. There's a relentless bid that's not bearish long-term at all. But let it dance, let it breathe a little bit, let it digest. This thing's been going in a straight line higher as Bitcoin and other cryptos have been kind of sideways or correcting. If God forbid these coils in Bitcoin or Ethereum or these other altcoins are to resolve higher, I find it hard to think that Coinbase will be falling or correcting, right? It's probably going to just keep tripping higher. So what is our next target? We're looking at 160. You got a little shelf of lows right around here. 160 level. But
Talk about
really
a measured move that passes the eyeball test at least.
But here's the truth about this one. And here's how I'm playing it. And here's how I've been very clear about how I've been playing it since we started talking about it last year. It's going back to those old all-time highs. We talk about Bitcoin completing a reversal pattern. We talk about Ethereum banging on the door right now, about to complete a reversal pattern. Solana's up like 3x over the past less than 2 months, right? Things are really waking up and the animal spirits are coming back to crypto.
Even helium, I saw Louis' post yesterday.
10x price target.
Right.
10x. I told him to do that. It's time to be aggressive, right? Like with Coinbase, yeah, we bought it at 40, and that's going to be a 10x almost back to those all-time highs. And that's really the ultimate price target here.
Yeah, Ben Graham has an awesome quote. It's in a bull market, imagination matters a lot more than I'm butchering it, but you got to kind of think out of the box. If we are in a bull market here, they kind of stretch your imagination.
This is the broker of choice for retail crypto investors. This is now the exchange of choice for institutional crypto asset managers, right? Ask BlackRock or JP Morgan, all these spot ETFs that they're launching, going through Coinbase. Coinbase is going to make fees on every transaction that they do.
And you got to imagine, the process of going public and having to maintain the rules and regulations, stay within those lanes. I mean, that probably makes them so much more compliant and just, naturally a winner in this space.
Everything by the book. That's part of their corporate culture. They've made that very clear for several years now. Brian Armstrong wanted to make sure that they file all the same regulatory reports that any major Wall Street institution or big money center bank would, and they do. This is not a Binance situation. It's not an FTX situation. They're incredibly transparent. They file monthly reports that you can go, if God bless you, if you want to, you can go and see exactly where their customer assets are held, right? Something FTX never did, never would do. And I think Brian Armstrong, really the CEO of this company, one of the best leaders in corporate America today. I love this. The reversal is in. You can use 115, but I really think 84 is where that base is completed. So don't be alarmed here. If crypto does have some give back, listen, a stock that's going to move higher by almost 100% in a month when it rallies might give back 30, 40, 50% on some corrective action. So don't get scared out of it. Just buy it at a better price if that happens.
And this one really reminds me, and it's a great example of that point you were making earlier with Roku, some of these younger bases, some of these non-completed ones that are still in that phase, but they've formed kind of smaller bases. They're not yet at all-time highs like a Visa or a Microsoft, but this is probably one that's more like a Palantir or a Roku, right?
Got one more.
Sure.
Why do I like it so much? We like to buy leaders.
You got to put that in the line chart. Don't break your own rules.
And I'm not benchmarking Coinbase here against the S&P or ARK, which a lot of people do. I want to know, is Coinbase outperforming the best stocks? Large cap tech, XLK. This is like Coinbase relative to Apple, Microsoft, Nvidia. Yeah, Coinbase is outperforming the best stocks in the market. This reversal pattern on relative terms also just completing as we're getting the reversal, completing on absolute terms. There is just so much to like here. Back to those old highs. Giddy up. Let's go.
I like that. I like that relative trend a lot. But we should probably leave it here. I mean, we're almost running twice as long as we usually do on this show. We're just having so much fun here. You guys are awesome. I know we didn't get to everything, so we're going to try to make note of that and get to them next time. In the meantime, you guys can email us any of your ticker requests at questions@stockmarketmedia.com. Again, my name is Patrick Donawilla. I'm the editor of the Chart Report. You guys got Steve Strazza right there breaking down the charts. This was awesome. Steve, any last words?
Thanks for joining, everybody. We'll see you next week.
Awesome.